Welcome back to the Alternative Highest podcast. I'm Dustin Gahn. This is Jeff Comisky.
Comisky, yeah, you got it.
And today we're going to speak about insurance, life, auto, and the value of life insurance and auto insurance. I obviously am not an insurance agent, but we'll get to a few of those questions. How long have you been into insurance?
I started in insurance 19 years ago. Started with life insurance, and then I ventured into home, auto, and commercial insurance about 13 years ago.
That's just to expand your brand, get more
expand brand,
sales.
Multiple streamlines of income. Obviously, everyone needs different types of insurance. It's nice to be able to have more products on your shelf.
100%. In all that, just for me,
where
do you like? What's your favorite insurance to move?
For sure, life insurance and benefits. Just it seems to be one of the things that I started with and still resonate with.
Is it because of the relationship that you'll build off of it and the knowing that you're going to be helping long term? Is that the love for the life part of it, or is there a different part of it that's a rush for you?
I think it's just that you're working with people, whether it's a family and helping them solve issues that are very almost unattainable to solve, loss of life. So it's kind of a cool thing. But business owners, there's opportunities there that we work with all the time to help people who are setting up businesses.
Their employment employees? Yeah.
Or even partnership. You and I start a business.
Okay.
Right? Well, of course, first thing we do is we dive right in and we're going to get busy at it. We both spend a lot of sweat equity.
Yeah.
Time and energy, and we probably have very little cash flow in the first year. All of a sudden, we start making a little bit of cash flow. And then you're like, okay, what were to happen if I were to leave tomorrow? And you'd be like, well, I'd buy you out. Well, what would you pay for it?
Okay.
It's $1 million question that is hard to answer.
And how does one get to there?
Well, that's part of that fact finding, know your client. But typically a shareholder agreement would have a clause in there for one of two things. One, whether loss of life. So if I died, you really don't want my 10-year-old daughter to be your new partner.
No.
Or my ex-wife. They don't know what we do.
Okay.
Same thing. You also don't want to be responsible for my 10-year-old daughter. You got your own family.
Yes, sir.
So if all of a sudden it fails, you can say, well, that's on me. And entrepreneurs, you and I, as we're going through it, we're sitting there we're up all night. We're thinking about things. How are we going to get to the next level? Are we going to get to the next rent check? Are we going to be able to make it to the 2-year point? Because we make it to 2 years, we probably got something that works.
Yeah.
You and I both know that.
100%.
I probably don't share that with my family day to day because they probably don't need to know that.
Yep.
You don't want to have that conversation with my 10-year-old daughter.
No.
Or even if we got there.
Yep.
Entrepreneurs know that, hey, I got past those 2 years and we're rolling. Well, the world changes quickly, and maybe the business we thought we were going to have for 20 years gets outdated in a day.
Right.
How do you explain that?
Yeah.
You as the entrepreneur, you get it. It's like, I got to start over.
Yeah.
I got to go back to zero.
Regroup.
And you got to go back to zero. So often what a shareholder agreement does is you set an arbitrary amount. So we start out and say, okay, we both put $50,000 into the business and we're going to run this for 5 years. And we're probably going to make a third of what we would do if we would work for someone else. So let's just arbitrarily pick a number, $200,000. Our company will buy 2 insurance policies, one on you for $200,000, one on me, assuming we're 50-50 partners.
Mm-hmm.
If it's different, one person would have more, one person would have less. If I were to pass away, the company gets $200,000. The company makes a check payable to my estate for $200,000. The remaining shareholder owns 100% of the company. The family of the deceased looks at an agreement that was set up with their lawyer that says this is how it was done, there's no other moving parts,
Yep.
you're done.
Very
Now, maybe you luck out a little bit because now you own 100% of the company, but maybe not.
Yep.
Because maybe you and I both had different things that we did, with our expertise.
Yep.
And how do you replace mine now? Now you got to go replace me.
Okay.
Or you got to be able to do what I did. So if we were exactly the same and we did the exact same thing, it's a little bit easier because you can just work twice as hard.
Yep.
But if you're an expert at marketing and I'm an expert at accounting,
yep.
you can still do your marketing, but you're going to have to hire someone to do accounting. So you should have some money because maybe I was making an income. You can do that. So that's what a buy-sell agreement would do.
That's very interesting.
Yeah. So life insurance plays a big part of corporate partnerships.
That I did not know, and that was interesting. Just to piggyback, what would be 3 of the top reasons for a young adult to start their life insurance off in comparison to ladies and gentlemen our age?
Yeah. So male 53.
Yep.
Male 34, male 24. Obviously, I say it in jest. I'm never going to be as young and healthy as I am today.
Mm-hmm.
And you and I can both giggle to say, hey, Jeff, I see you at the gym.
Yeah.
You could work a little harder, maybe work on the diet a little bit more. We could lose a little bit of weight, get a little bit more muscle. So, yeah, I could get healthier.
Yeah.
But when I say health, I talk about diabetes, heart attacks, strokes, things we have and we get over with.
Mm-hmm.
Addictions, mental health, massive one in today's environment, right?
100%.
So I'm generally not going to be as young, for sure. I know I'm never going to be as young tomorrow as I am today, but generally when you're younger, you're also healthier.
Mm-hmm.
So someone who's, say, 25, and I was that person at one point in time, I don't need any life insurance.
No.
Well, I don't have a spouse. I don't have a 10-year-old daughter. I don't have a lot of debt, but I was young and I was healthy. So if I were to buy a product that I bought at 25 that I ended up buying when I was 35, it would be half the price.
Okay.
And then if you're 34 and you go to 54, it's quadruple the price. So I bought a product that's a permanent insurance policy that's like $140. And I bought that when I was 34 and I pay that every month.
Okay.
Now I'm 53 turning 54. So essentially I've given them for $140 a month for 20 years. I'm still here.
Yeah.
I guess I could have waited till today to
But
buy that policy, and I'm still lucky. My health is still good, but I can't guarantee that next week either, right?
And that 140 is
now $450.
Yeah. Okay.
Right? So sure, I've given them a big chunk of change going along, but now I have the deal.
Yeah.
But if I started that when I was 25, it was probably $80.
So it is.
So there's value because the likelihood at 25, you probably look at it and say, I'm either going to start a business or I'm going to have a family,
mm-hmm.
or I'm going to take on debt because I'm going to buy a house and I don't want to burden anyone with that.
Yeah.
So the other thing that I always like to say is buy a couple policies, because imagine you and I want to become a partner.
Yep.
And I'm really, hell bent that we have to have the insurance or we can't do it. And you're like, I'm not insurable. Be like, well, then I guess we can't go into business together. But if you said, hey, but I have this insurance policy I took out when I was 25, I can use that one, but you go get one now.
Okay.
Great deal.
Yeah.
We can still pay today's rates. You can bank the money, the difference.
Okay.
But you still have that policy. So you can buy that insurability for a very low cost as a young person.
That is a great value.
It's a value.
Because I'll be honest with you, I'm 41 with no life insurance.
Yeah. And, you're healthy today.
Mm-hmm.
Right?
I'm healthy.
Yeah.
But my cost is going to be quite a bit.
Right.
Yeah.
Because life.
Yep.
because of life.
Yeah.
Reality is we have a life. We've all lived it. We've done whatever we do.
Yeah.
You know, I eat too many cheeseburgers and, you know,
Yeah.
drink too many cold beers.
There is that.
Right?
The health plays a big part.
Yeah, absolutely. There's lots of things we can talk about too, right? I mean, the fun fact is like marijuana, you know, 10 years ago, if someone said on the application, "Hi, Jeff, I smoke marijuana," I'd be like, "Okay, how often?" "Oh, recreational, 2 or 3 times a week."
Yep.
"Okay, you're going to pay smoker rates." You'd be like, "But I don't smoke cigarettes." "No, but you had marijuana."
Yep.
And I feel really bad for the person who said, "Yeah, I had one marijuana joint this summer at a campfire." One. And they're not joking.
Yep.
And they pay smoker rates. So the insurance company had a big issue when all of a sudden the Canadian government was like, we're going to make marijuana a legal thing that people can do, and it can be recreational. So they changed the rules that you can basically have an edible or a marijuana joint a couple times a week.
Okay.
If you try to say, "Hey, I'm going to do it every day," they'd say, "Well, maybe you should look at medical marijuana as an option." And then you might be rated because of you're on a drug, right? No different than any other medication you might be on, right?
Okay.
Potentially.
That makes sense.
So it's interesting, right? And what is 1 unit?
Yeah.
Is it one edible that's 10 milligrams or one edible that's 50 milligrams?
Yeah.
Or is it,
how do they measure?
Or one joint that's half a gram or one joint that's 3 grams?
Yeah.
Or 5 or 10.
Exactly. So,
but they don't really have a measurement tool. It's in good faith. The answer is in good faith to say, yeah, I have one. So they would just assume that it would be an average size joint, or you would probably be using 10 milligrams because that would be what would be sold at 90% of stores in Canada.
Yeah, very interesting. So from life insurance, I'm going to just tiptoe into the importance of other types of insurance. Mm-hmm. So renters
insurance, let's start there. I think that's a big thing that probably a lot of people
skip.
They basically say, I don't have a lot of goods, and I'll just go without it. And it's probably only a couple $100 a year.
Yeah.
But it doesn't just cover your contents. It also covers your liability inside of your apartment.
Ooh.
So I'm your guest here today.
Yes.
If I were to fall over a cat toy and smack my head off of the beautiful countertop, and you call 911 and I wake up in the hospital and I'm not able to do my job, I would have a issue. I would have no choice but to sue you. It wouldn't be personal, but you would have a renter's insurance policy, and your renter's insurance policy would provide some liability coverage in the event that happened. You had no intention of your cat leaving a ball on the ground. You didn't booby trap me to fall, so you didn't do anything wrong.
No.
It just happened.
Yeah.
So they'll insure and protect everything that is non-intentional.
And is that no matter what renter's insurance you take out, or is there only one type? Or?
Yeah, the renter's insurance will automatically have a liability component and a value of your contents.
Interesting. And is that the same as somebody that owns?
Yeah, so you can buy $1 million of liability or $2 million of liability.
Very interesting.
Probably a $50 uptick to buy $2 million of liability. I would recommend everyone buys $2 million of liability, whether it's a renter's policy or a homeowner's policy.
Okay.
Always.
Why is that?
Well,
just in
I'm
case?
50. You probably got to cover me for 25 years.
Okay.
But what if I was 30? You got to cover me for 40 years. 1 million might not cover it. My lawyer might say, well, great, we're going to get the $1 million out of the insurance company, but we'll see what else you have.
And then that comes on me.
That comes on you.
Interesting.
So buy $2 million.
$2 million.
So it protects you for a little bit more. And then contents are a funny thing because people always say, well, my contents aren't much.
Yeah.
And a lot of people will, acquire contents over a period of time,
Interesting.
and they don't really realize how much contents they had.
Yeah.
I actually always just say to people, okay, if I were to give you a credit card today and I told you to go buy everything you had in your house today, and you have to go buy it new today,
Mm-hmm.
you're not going to search Marketplace for a deal on a beautiful table,
Mm-hmm.
and you probably would have found one, but you're just going to go out to, Tepperman's and buy a brand new table.
Yep.
And you're going to buy beds, and you're going to buy couches, and you're going to buy cameras, and you're going to buy a wardrobe, and you're
Yep.
going to buy dishes, and you're going to buy towels, and you're going to buy everything, and you're going to buy soaps, you're going to buy shampoos, you're going to buy everything you have. It's amazing how much number that
Yeah.
would be. So I always tell people when they're calling, they're like, well, 15,000 is probably lots. And I'm like, I think 15,000 might be, just in your
Undervalued.
wardrobe.
Yeah. Yeah.
Really,
Really.
in your bedroom, probably, like your bed, your dresser, and then all your clothes.
Yep.
Because go buy 20 new outfits and just tell me what that runs.
Exactly.
Buy 10 pairs of jeans and 5 pairs of shorts and socks and underwear
It
and
adds
shirts
up really
and
quick.
a suit coat and all the things that we have that we acquire over time. It adds up quick. We buy it slowly.
Yeah.
But in this case, something happens and it's building.
Yeah.
You will have a nice amount of money to go buy.
As you were
stuff.
saying all that, I was sitting there, I was like, I wonder what I did. And as I was doing it, I was like, I was adding it up as you were saying. I was like, yeah.
So you got to, so check yours, right? Because if you have renter's insurance, number
Yep.
one, do you have 1 million or 2 million?
Yep.
And ask how much the difference is. You'd be surprised. It's not
Yeah.
much
Yeah.
for that 1% chance.
Yeah.
We
No.
buy insurance as well with the likelihood and the desire that we never use it.
That is, and that'll lead us into our next little spot here. I have a past. I've done some dumb things in my past,
Mm-hmm.
and I have got myself into a couple situations that jacked my car insurance.
Right.
One of them led me to not be able to afford my car insurance, and I figured that it was just easier to drive with no car insurance than it was to pay the piper.
Right.
When I was in my car accident, I did not have insurance,
Mm-hmm.
and I was not properly covered, and I had to go about a different way to answer to my wrongs
Mm-hmm.
and to get coverage, because I had a very bad spinal cord injury, and it was a very different avenue.
Yeah.
So that leads into the importance of auto insurance and how
much you purchase.
Yeah.
So a couple great topics there. Obviously, a different place, and we're happy we're having this conversation
Yes, sir.
today.
Yes, sir.
But people do drive without insurance.
Mm-hmm.
You weren't the standalone anomaly in the world. It happens all the time.
Mm-hmm.
We all probably have known people that have driven without insurance because they either can't afford it, they've lost their license, or they just chose to do it.
Mm-hmm.
And you got in a car accident with another vehicle or by yourself?
By myself.
Fortunately.
Very
because
fortunate.
you could have very easily have hit someone, and then now you have to live with the, start off, have to live with the damage of hurting someone.
Mm-hmm.
The one good thing is if you're ever driving and someone hits you that doesn't have insurance, your car insurance will actually respond to yourself and protect you for your vehicle, for your injuries, all those things. So that's a blessing because, like I said, you never know who's on the road.
Mm-hmm.
Right. And that's, a good reminder. Just be cautious of that. Buying insurance for auto insurance. Of course, I'm an insurance believer. So once again, 1 million or 2 million.
Yeah.
2 million for sure, because you think about it. You hit someone who's younger and they have a spinal cord injury and they don't recover like you. And they're in a place where they're in a world of pain for the rest of their lives. That can be very, very expensive.
Very.
So if you have 1 million of liability, it's a nice number, but 2 million is much more. People buy up to 10.
Yeah.
So I would say always have a minimum of 2. There's a lot of people out there that are driving with one, and I would recommend that you call your insurance agent or agency or broker and say, hey, what does it look like to get 2 million? That's my first tip. Another tip is there's Ontario specifically has changed the amount of insurance you would have for soft tissue damage and or catastrophic repair and that. And you can buy up more.
Okay.
And I always buy up to the maximum amount.
Okay.
And once again, at the end of the day, maybe that costs me $10 more a year.
Oh,
but if
nothing.
I imagine that if I had the type of injury that you had
Mm-hmm.
and I was insured, I'd want to make sure that I didn't cap out at a limit of 65,000 for soft tissue, which is like massage and therapy and stuff. I want to make sure that I have 150,000 or
Exactly.
135,000. I want to cap out at the max.
Very interesting.
I want to have 2 million of liability on that. I want to have loss of income at the highest amount they can give me, which still won't protect me against my whole income, but it'll at least allow me to cover some bills.
Okay.
So there's that. There's, you can buy coverage for people to clean your home if you need to. You can have people to coverage, like that to protect, cover your soft tissue, hard tissue, all those types of things. Life insurance as well inside of your auto policy. So I buy the max.
That's very interesting. So when the new driver is looking for insurance,
yeah,
there's levels to this.
There is.
Correct?
Yeah.
And for people that don't know, I didn't know that no matter how bad of a record you have, there's levels to this.
Yeah.
So with new drivers, with people with terrible records, what's the in between there?
Yep. So I always recommend for young drivers, you're going to be 16 and you might say, I don't really need to drive, but I would recommend getting your G1 permit.
Mm-hmm.
That way, at least you have the opportunity to get some practice driving with whoever it might be, parent, family member, whatever. And then you might say, but I don't have a car, so I don't need to get a G2. Well, I would try to get your G2 1 year later, which is typically the earliest time possible. Because once you have a G2, you start a record of number of years actually being licensed.
Yep.
And then a lot of young drivers get a G2, but they never get a G.
Yep.
And you can wait 5 years to get your G from your G2. So a lot of people wait the 5 years to get their G, and then all of a sudden they get a job, and they're like, now I want to get a car. It's like, how many years have you been G licensed? Well, 1. Well, you're 20. Could have got that at 16, 17, 18.
Yep.
Now you would have 3 years of experience, even though you didn't have a car.
So that G2 to that G makes
a difference.
Big difference.
Another rating difference.
Wow.
And then obviously number of tickets, accidents, all that stuff. So people that are, good drivers with, no tickets, that's a great thing.
Yep.
Young drivers that get tickets, they pay a lot more than
it takes a
lot of other time. And it's painful.
It builds up over time.
It's painful regardless for a young driver. But even if you can't afford the insurance, go through the process of getting the G1, the G2, and the G.
Yeah.
So right that way, at least you have the licensing. You might not have the years of experience, which is another bonus in your costing, right?
Yeah.
So years of insurance, years of licensing are two things that go into the price of your insurance. And then the things that are detrimental, which could be tickets or accidents. Also, the car you choose. So I have a lot of people that come up and say, I got a car, and they're so happy and they're proud because they got a car. And then they look at it and they'll say, okay, well, this is what your rate would be for this car. And, it's usually a sticker shock.
Yeah.
But if you would have got this car or this model of the car, it might be $1,000 cheaper.
So you're better off getting a quote prior to buying a vehicle if you're a new.
If you have a good relationship with your broker or your agent, I would call them and say, hey, I'm endeavoring to get myself a new car. I was thinking of this, or this. And then they can run those numbers for you and say X, Y, and Z. And if X is the most expensive and Z is the cheapest, maybe you really wanted the car that was associated with X, but you might say, I'm going to buy Z. But at least you're making a informed, conscious decision.
Great. So in all we didn't cover the commercial.
Yeah.
Is there a big difference in commercial too?
Yeah. So commercial,
because it seems like a whole nother giant.
It is a whole other giant. So there's like what I would call a small business package, which is your typical, like my office. You've been at my office. It's just an office with, a couple desks and a couple things, and we got printers and computers. So I got coverage for theft.
Yep.
I got coverage for liability.
Yep.
2 million or
Yeah.
5 million.
Yeah.
Usually in commercial, I buy 5.
Oh, you can go up to...
I buy 5 million in commercial.
Really?
You can buy 2, but buy 5. And then the nature of your business will also determine the premium. So you can well imagine if you are a business owner and you have 20 employees, and I'm a business owner and I have 1 employee, the likelihood your premium right off the hop is going to be not 20 times as expensive, but more expensive.
Okay.
And then my employees sit at a desk because we sell insurance.
Mm-hmm.
Your employees are all driving because they're all sales reps.
Yep.
The likelihood of one of your employees getting into injured or damaging another property or something is way higher than my employees.
100%.
Your employees could be working on ladders at heights. Well, your liability associated with that could be much different.
Very interesting.
You could be working at places where you do a specialty type of service and you're working in buildings that are furnished with $2 million worth of fine art. Well, your liability associated with that business would be way higher than the lady in my office who works on paper and hands paper over a desk to our clients.
Yeah. Wow. That's it's all things that you don't ever think of.
But the value there is to work with a broker.
Yeah.
And to work with someone that you trust and work with someone that you can form a relationship with. I'm always going to say this too, because it's something that that I think is very, very important, especially in our community.
100%.
You might call up a company called TD Insurance and get an auto and a home quote from TD Insurance. And you're calling a 1-800 number. We'll guarantee you none of those employees are in our hometown.
No.
So they make a wage and they go spend that wage in their hometowns.
Mm-hmm.
They're not supporting the small businesses that are here. They're not supporting the ball teams. They're not supporting the charities. They're not making our community a better place. Also, you can't have their ear on a Thursday night if you run into them and say, hey, I got a quick question for you.
Yeah.
Or, Jeff, I'm calling you up. I'm coming in because I really have a problem. And then I know, hey, I better make good time. Make some time for my friend, for my client.
Yeah.
So work with someone local. Work with a broker,
there.
because obviously working with a broker in my mind is beneficial because they'll have more options. Sometimes you might go to an agency and they might have 1 carrier, or you can work with a broker that might have 8.
Yeah.
So working with a broker that has multiple carriers is more choice for you, more choice for them to present to you.
Yeah. There's so much value in this conversation. It broke my brain. Like I'm
it's a lot to process.
I'm sitting there, I'm trying to process it. Like I wasn't.
We went to a lot of different insurance places in a very short period of time.
And it was really appreciated because this is what I wanted to do. I wanted to bring value, and you broke my brain.
So here's my my takeaways. Life insurance, you're never going to be as young and healthy as you are today. Number 2 on life insurance, if you are in a business and you have a partner, protect your partnership, protect the families behind the partnership. It's so cheap to buy a term insurance policy that will make that go away. Mm-hmm. For auto insurance, especially for young drivers, get your licensing as quickly as possible.
Yep.
Even get insurance as quickly as possible. And if that means being a temporary driver on a parent's policy, even if you don't even really drive it, it might be worth paying that temporary rate.
Yep.
Or at least start it, and then if you go away to school, you can get rid of it, come back, add it in. At least you'll have some coverage.
Experience.
Look at the liability coverage on your auto policies. 2 million would be my minimum at this point.
Yep. 100%.
5 commercial policies. Make sure your liability is at 5. Talk to a broker and make sure they're reviewing that. Check your assets on your renter's policy to make sure that you're protected for the right amount. No different than a homeowner's policy. It just compounds because you probably have likely more rooms to fill and likely more people in your family. So those are the things, I guess, my quick takeaways on insurance.
Jeffrey, brother, I appreciate you. That was amazing.
Thanks.
Thank you so much.
Yeah, it was awesome.